But Puneet, another company that isn't doing so well is Balkrishna, and it's on the back of earnings. How are the earnings for the tire company?
Well, the earnings are very strong coming in, profitability up roughly 47 odd percent for this particular quarter. But, the stock is, down today and there are, because of management commentary going forward as well. So there are four key reasons why we think that, going forward, the management has stated that, first is, of course, the subdued demand picture. They mentioned that, volumes grew by roughly 24% in quarter one, but they are just expecting a low single digit volume growth over the next 3 quarters, which is a key negative for the stock. They've also mentioned that they're expecting some headwinds in the export markets of Europe as well as North America, and have said that some channel filling has happened in this particular quarter, which might indicate to higher inventory levels as well. The second reason is, of course, the cost increases. Now, freight cost as a percentage of sales are expected to increase to 8 to 9% versus just 6% for Q1, and that's of course going to have an impact on profitability. They're expecting the raw material prices such as natural rubber. We've already seen a very big price hike come in this particular quarter, and we've seen that 2 to 3% impact in Q2 is also expected, and the similar impact we've seen in Q1. The third key reason is, of course, new regulations coming in for the tire makers. So European Union deforestation regulations come in on the 31st of December of 2024, which state that it will be required that they will supply the rubber in European Union would be not grown at deforested land, and that's going to be leading to increased cost of roughly about $300 per metric ton. So currently around 1,800 metric ton is the base cost, and that's set to increase, which will have an impact on margins going forward. And the fourth point is very key, because despite the subdued demand environment, the company has announced the fresh capex in this particular quarter to be executed over the next 12 to 18 months of about 1,300 odd crores. They mentioned that this will add capacity addition of around 35 million tons, and demand picture being subdued, that's going to be a key very watchable fact to watch out for. The brokerages are also negative on this particular stock because of valuation concerns as well as demand momentum now. So Motilal has a sell rate or neutral rating with a target price of 27.70 rupees per share. It's a downside at the current levels, and Citi has maintained their view, which are a further lower target price of 2,150 rupees per share from earlier 2,300, which is a downside of about 29% from the previous close. So overall, negative demand momentum going forward, and brokerages are also very negative on the stock. Back to you.
Yes, thank you, Puneet, for giving us those details.